All right, Lata, thanks a lot for getting us all of those details on the rupee move. So 79.25 is the next level that we're going to be watching out for. But with that, let's move on and invite our guest on the show now. We're joined by Jigar, Mistry, co-founder of Buoyant Capital. Jigar, good morning. Thanks a lot for joining us. It's good to speak to you after a while. And you know, for the markets, yes, we have that global cue out of the way. The FOMC has gone ahead and hiked rates by 75 basis points. We are technically in a recession now, but the markets are just surging. So take us through your thoughts on this rally. Do you think that it's sustainable, number one, and what does this mean in the overall context for India?
Good morning, Pavitra. I think yes. See, what's happened is that we are exaggerating on either ends of what is an acceptable anticipated level of markets. What happened in June, we did discuss the last time I was talking to you, was that with the fall in prices of certain assets, the fall in value was also happening, right? So a rising interest rate scenario should have resulted in the fall in value of a lot of companies, which did happen, but that did participate with the fact that a lot of other businesses were falling in line where the value hadn't fallen. Now what we are seeing is some amount of pullback. People initially went from inflation to recession, and now to the fact that the Fed hikes will, dramatically reduce as we go ahead. And that sort of is leading the cheer. This kind of pullback rallies we have seen in the past do have a lot of legs. One can get positioned accordingly. One of the sectors that has rallied, which you are rightly showing, is banking. The entire services pack is something that we have been interested for in quite a while. So I won't be surprised if this rally has a lot more legs, and we'll continue to see some amount of relief from what was an unacceptably low level with regards to where valuations were for India.
You like Select Pharma. That's what you told us when we last spoke to you. Does Dr. Reddy feature in that?
No, Rima, good morning. It does not. The one that we have been positive on is DV's lab. I think the street was extremely pessimistic on the molnupiravir, which people believed was, one-off molecule, and that would drive away the increase in profitability that, DV's was consistently reporting. To our opinion, a lot of work goes into, developmental stages, and that's not something that the market is always aware about. DV obviously never speaks about their players and the companies that they are working with. So that's one business that we have liked, and, among the only one that we have in the portfolio right now.
Jigar, what do you think of some of these auto names? We had earnings from TVS Motor. Those look very strong. Bajaj was better than expected. Do you like any of these companies now, and would you think it's a good place to put some money?
Yes, Pavitra. So I think if we break down the automobile space into three parts, two of them are moderately interesting. One clearly is the CV cycle. And across the value spectrum, if you look at CVs, that's a very interesting play. The four-wheeler have not really been performing that well, so that you can sort of cull out and say we'll look at it when that returns. The two-wheeler, I think, is in a cusp. What's really happening is that, at one end you are having this disruption that most people are not sure how it will eventually play out. In between, the coal and the anti-ESG themes make a comeback. So then the EV theme takes a back seat. But more importantly, in the meantime, most of the investors are choosing a spray and pray sort of an approach where they say, look, this needs to happen. The ecosystem is fairly settled, and India as a country has not really taken off where it doesn't have a raw material advantage. So obviously, the battery management system, the battery cell pack, etc., is not something that India is going to be great at. But there will be these businesses which will be able to build out an ecosystem if we give in the risk capital. So most of the players that you are seeing are the ones that have been able to raise some amount of money in the EV space, and then the valuation then tends to far exceed what traditional investors like us sort of believe is reasonable risk capital. So I think some select two-year names, select CV names are something which are very interesting.
Cyient is a company that I remember you like in the mid-cap IT. Earnings this quarter were very strong on the top line. They've maintained their full-year guidance as well, but margins were a miss. A trend that we've seen across the rest of the IT pack as well. Your thoughts on Cyient post the numbers, and your expectation of where the stock goes from here?
Yeah, Rima. So I think we continue to own and be very optimistic. I think one phenomenon that we didn't understand on the way up and therefore we didn't get hurt on the way down was the increase in multiples. Right. So India does not really have tech plays. We have IT services plays and tech plays, like Zoom, for example, could grow revenues by 5 times. Any Indian IT services company, if it has to grow volumes from say 15 to 25%, is an Herculean task because you need that many number of more people. You need to have trained them. They should be on your bench already, and that doesn't sort of transpire within the year. In between that, the margins expanded because one, there was a lack of travel. Two, a lot of people were working from home, so margins expanded. Valuations expanded in line with how Nasdaq sort of was trading back in the day, and therefore we couldn't understand. We didn't believe that could happen, and that did transpire, and then that has reversed. So part of that sort of dysfunction is now addressed. Cyient wasn't the one that participated a lot on the upside. It did move up post-COVID, but didn't really participate to crazy levels of valuations. We think we are somewhere closer to 45 rupees this year and 55 rupees next year. And then the stock is trading at very attractive valuations. Part of Cyient's business comes from, the aviation, and that will, not completely rebounded yet. I think that growth continues, and among the IT space, while we are avoiding a lot of these large cap names, we still continue to like the likes of Cyient or eClerks or even Allsec for that matter.
Okay, so that is on the IT pack. Jigar, do you look at any of these, restaurant kind of stocks? We saw Westlife Development. They posted record revenues in this quarter. A lot of them have been, buzzing in trade as well. So would you like any of these? Westlife, Specialty? Yeah, go ahead.
Yeah. So yes, I think that space is interesting because you casually move out or travel out of the country. That demand, when you see it with your own eyes, is something else. And to that extent, I think all this recovery plays are going to have a reasonably good field day. Within that pack, the company that we own is Indian Hotels. That's one space where we find that market is not completely giving the credit of what could eventually transpire in numbers, and that's one stock. I think people can choose to play it based on whatever risk their portfolio allows for it. Within our framework, I think Indian Hotels offers the best sort of risk reward scenario.
Jigar, thank you very much for joining in. The first normal quarter after 2 years. So many of these companies like Shoppers Stop, Westlife Development, which owns the franchisee of McDonald's, have seen some solid quarters in terms of revenue growth. Get into a break on that note. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins in next.